Me smile.
105.7 Highlands Light FM. That's Uncle Cracker there. I'm Morning Dave. We're at 8:39 here. 21 before 9. Time check in on your money and see if Wall Street can turn a corner today, because it was kind of an off day yesterday. Downtown Sebring we go to Statler Financial Services' very own Phillip Statler, who's on the line. And Phillip, we every once in a while have those days where your computer is messing up on you. Mine is a little bit today, so let's cross our fingers we can get our data together. How are you?
All right, man, doing well, running kind of like you, running a little behind today, but hey, I put together some numbers. And yesterday, though, I got to say, Dave, was not what I had hoped for, and maybe even not what I expected, but it was a pretty dismal day, especially for the NASDAQ, man.
Yeah, it was. NASDAQ was down 220 points. The Dow was down almost 229, and the S&P was down 45 3/4. And that NASDAQ dump was 1.87%. And that's another really crapola day. We're down bumping our nose on 11.5 again after a pretty good run for the last couple of weeks.
Yeah, it really is. And so we continue to hope for some good news, because I woke up this morning to futures looking really, really bright this morning. So it threw me kind of for a curve, because interest rates are coming out today, and I didn't see anything really good news yesterday come out. So it was a little surprising to see so much green ink this morning.
Oh, yeah, those midday reports yesterday were exactly the opposite of what we wanted to see for the sake of good news. You and I were both saying that, having something come in spot on what the economists expected would be perfect, because bad news tanks the market, and good news would give the Fed reason to want to raise rates more aggressively today. But the consumer confidence level way down from what they expected, and housing starts off of what they expected. It was not a good day, and it certainly showed in the indexes by the time the day ended, right?
Yeah, sure did, Dave. It did, in fact. And I mean, the new home sales to me was a dismal. I mean, expected to be 660,000. It came in at 590,000. So a pretty good size miss there.
Which kind of once again gives us that notion of I keep reading that the housing market is still okay in Highlands County. People are still selling homes, but if you're thinking about it, you kind of got 6 months of advance notice in Highlands County before a national plague hits us here. That might not be a bad idea to look at your schedule, right?
Exactly. If you're thinking of getting out of your house, it may be sooner better than later.
Absolutely. I understand that Google yesterday did not have a good report, but what I was reading on my top headline stuff was that they actually got a gain off of it, kind of like Netflix. It wasn't as bad as the market expected it to be, huh?
Yeah, they did. They did miss on their profits and their sales. And so it was a little bit of a disappointment as people kind of, brace for the worst. But their stock, I mean, yesterday, though, let's face it, yesterday they were down 2.3%. So they're bouncing off of that, and they're up 3.4% right now. So they're getting that back plus $1 a share right now. So that's good for them, but they got a long way to go to get to their 52-week high, Dave.
Pretty much like all the tech stocks do. We start the morning out from a macro basis with kind of a pleasant surprise, given the fact that all the other news we've been getting hasn't been so good. Durable goods orders, the stuff that factories buy that actually lasts, that you keep for 5 or 10 years, they were expecting, I gather, a decline, but we actually ended up positive by almost 2%, and that almost sounds like a boom time number, doesn't it?
It does, Dave. They expected it to drop by 0.4%. Instead, it actually grew by 1.9%. So that was a much better than expected result from durable goods. Now, the key is, what will that make the Fed start thinking about today?
And that's the 500-pound gorilla in the room. 2 p.m. this afternoon, the second day of the Federal Reserve Open Market Committee meeting starts, and that 2 p.m. is when they release their interest rate decision. One of the pieces that I was reading on my tip sheets this morning, the Federal Reserve seems to consider 2.25 to 2.5% a quote-unquote neutral level. That's estimated to be at the point where any further rate increases they'd call restrictive. One of the international banks over in Germany was saying they think that number needs to be higher, and that's advice I'd just as soon the Fed doesn't take on the short term anyway.
Yeah, hopefully they're not listening. But
Yes.
they don't take much advice anyway. So I think it may fall on deaf ears, even if they do hear it.
That's it. Conventional wisdom is they're back down to like a 0.75% increase. The 1% number is off the table. I think if the durable goods orders number had been smaller this morning, there might even have been a possibility of looking at 0.5% even.
You know, nobody really knows. I mean, I don't know that I would go quite that far, Dave. I mean, I think that no matter what happened, we were going to get 0.75. And if things really took off on fire, I think we probably would have got the 1%. But we haven't seen that, unfortunately, or fortunately, however you want to look at it. But it also means that the economics, the economy is slowing down. So, and that's what the Fed wants. They want it to slow down a little bit and catch up.
Understood. There were some businesses reporting yesterday and this morning as far as their quarterly reports, and we alluded to Google, not as bad as expected, so consequently post-market and pre-market trading, they're going up. Any other indications from the companies we trade on the exchanges?
Well, let's look at Microsoft, another tech company. Again, they missed on top and bottom lines as well for this last quarter. They've seen their earnings really slow down the last 2 years. The slowest has been in their cloud-based business, but they gave an upbeat outlook. So that, I guess, is some good news. They think that their operating income will hit a double-digit percentage increase for this quarter. That may be a little optimistic, but that's what they're saying. Kind of like Google, they ended up down yesterday almost 2.7%, but they're getting a bounce this morning up 3.2% before we get going, trading about almost $260 a share.
I'm getting the distinct feeling that tech stocks are really sitting on an edge, that it's real easy to scare the pants out of their shareholders this quarter.
Well, that is, you know, and they've had, let's face it, the NASDAQ's had a rough ride, and that's where a lot of the techs reside. So, so we know that there's some stuff baked in, but we're hoping some good news comes around and bounces them back up. Hey, on the other front, we've got Boeing. We've talked about Boeing a lot off and on, but they had a wider than expected quarterly loss. Revenue fell below the estimates. They did report a positive operating cash flow, which is better than what we've seen in prior quarters for them. No changes in their production schedule and those type of things. They are up about almost 3% this morning before we get going. So not too bad taking it there. So
that big order of airplanes out of Delta couldn't have hurt their futures of their future the least little bit, could it?
No, it couldn't. I mean, I'm sure that's still hanging out there and
Yep.
Good news for them. So, hey, we had Hilton worldwide. They reported and they beat on their top and bottom lines. They raised their full year forecast as travel demand continues to rebound. And we continue to see that in pricing when you start trying to fly or stay at hotels, or there's not much discounting going on right now. So we've got Hilton trading up 5.6% this morning, a nice little bump for them.
Puts them right toward the top of my big winner list this morning.
It does, huh?
Yep.
So then we had.
I'll bet you got one that beat it, though.
I do. I've got Spotify came in and they had a wider than expected loss. Their revenue, though, exceeded forecast substantially. They've seen an increase of paying subscribers, which is always good news for them. And they were trading down, but they bounced up. And I'm not sure what's caused this bounce because it's a big bounce. I mean, they're bounced up 9% this morning.
Wow.
Yeah, I mean, earlier, I think they were, no, they were up higher this morning too. I'm sorry, I was reading my notes a little wrong there, but yeah, so they were up 9%. So a nice little jump for Spotify given not so good numbers.
Good to hear that at the very least there's some optimism on the tech side, because like you said, NASDAQ's been getting beat the crud out of it lately. Other indications, one or two more.
All right, so let's look at a couple more. We have Garmin, the GPS maker. They beat on estimates. However, revenue fell short of expectations. They said that some of these results negatively affected their performance in the fitness segment, which I think people are out there still trying to stay fit. They're trading down 8.3% this morning. They're getting really close to their 52-week low right now. Let's see if we got something that's good news. Let's look at this one. Let's end with this one. This one's really good, Dave. Chipotle.
That's the one that I had on my S&P winner list. That's
it. They had better than expected earnings for this last quarter. They've been able to offset a lot of their increase in cost by rounding up prices and hiking prices, which is good. Now let's remember, Chipotle is an expensive stock. I mean, it closed yesterday at $1,316. It's up 8.1% right now. It would open at $1,423 a share.
I still remain amazed at a restaurant chain going for $1,420 odd a share. That boggles my mind.
It does. That it's still down though for the year. Year to date, it's down almost 25%.
All righty. Resetting the table. My screen finally came back up, by the way, too. Resetting the table. Yesterday was a down day on Wall Street. 45 minutes before we open, you kind of alluded to some red ink this morning that we really can't even necessarily explain. How are we doing this morning so far?
So we've got green ink across the boards.
I said green. I misspoke. Green, yeah.
I say it's been red. It's been green all morning today. Now it's down a little bit from the highs earlier this morning, but still great. We've got the Dow 30 up almost 0.5%. The S&P 500 is up almost 0.9%, and the NASDAQ 100 up 1.5% this morning. So nice little moves there after yesterday's decline. On the commodities front, we've seen some good numbers too. On silver, up a little over 0.6%. Gold's basically flat right now, and then crude oil up almost 1.2% at $96.06 a barrel, and that is down from yesterday's open.
I was going to say, I think we're starting to establish a pattern where there's always an overnight dip from a high, and that sounds like about the neighborhood, about a few cents cheaper than it was yesterday morning at this time, so I'll take it for the moment. Overseas markets, we had a mixed bag in Asia, but the Asian rim markets themselves, China and Hong Kong, both kind of off this morning at the close. European markets generally up. Looking at our futures, they're seeing some optimism on our side of the pond, and they're following suit. It's not really fair in life, but the fact is, the closer you get to retirement, the more you're concerned about your retirement funds. But the earlier you start planning, the smarter you are. How do I get a hold of you to start that planning process, Phillip?
Then give us a call at 863-382-0037, where they can schedule their core retirement design. We help them design the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning with both our computers fully functioning right here on Light FM. Thank you, Phillip. I appreciate it. Have a good day.
All right, buddy. You too.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, again, folks, I want to thank you for joining us today halfway through the week. Hopefully we can end up like we started the day. That'll depend on what the Fed does today when we see what interest rates do. But I hope you'll join us tomorrow where we'll talk about that and more right here on Facebook on 105.7. Hey, with that, have a great day. I look forward to speaking to you again tomorrow. Bye now.